Welcome to Swimming with Allocators,
the VC podcast from the LP perspective,
with your hosts, Alexa Benz
and Earnest Sweat. You ready? Let's dive in.
So, Erik, one reason I was really excited about this conversation is because you've just done a lot, not just as an allocator, but like in general. And so you've been a founder, a fund investor, and now CIO of a sovereign platform. Could you walk us through your path and journey to being the CIO of the Sovereign Wealth Fund?
Yeah, let me give it a go. Kind of a weird journey. It started out basically back in the I think about 2005, where I was living in the U.S. I decided to come back to this part of the world where I am right now in Denmark, Scandinavia. And feeling very inspired by what I had seen in the U.S., by everything that was going on in Silicon Valley, essentially sort of the whole concept and idea around startups and the whole formula for essentially setting up companies based on the venture model. And I met up with a younger version of myself. And we essentially decided just to try to copy what we had seen in the US and start building companies. And we built our first business in 2008. And you can probably not imagine what it was like back then, but essentially nothing going on, nobody understanding at all what startups were really all about, and introducing the venture model at a time where Denmark is a fairly traditional society, especially people are used to just making a living through honest work and normal jobs. So making the decision to start building businesses based on the venture model was, nobody understood what the hell was going on. And then we were both lucky and also doing rather well in building sort of serial businesses and working our way through a number of different, applying different models in the next, I think, 10 years to come. So between 2008 and 2017, we basically built 7 different businesses in sequence, experiencing also the buildup of an entire ecosystem in Denmark at the time. So if you could really imagine that nobody understood what we were talking about, there were no professional venture funds. The banks would laugh at us. There were no community structures. The Sovereign Wealth Fund did exist at the time, but really in a form that wasn't really fit for purpose. There were no family offices. So really all the individual elements of a professional sort of startup community were not there in 2008. And looking back almost 20 years later, it's almost a miracle that we've been able to sort of adapt some of the models. And I say we, I mean, I'm not talking about myself, obviously, but being part of seeing that system sort of emerge and applying some of the model was certainly based on the inspiration that I got from the US. And then we got to a point in 2017 where we were essentially a small group of founders sitting on the boards and the C-suites of all of our businesses all at the same time. And my aspiration was essentially to keep building, to keep incubating new companies, and we couldn't find the proper model to do so. Essentially, we weren't equipped to find operators to put into our old businesses. So I ended up letting my other founders know that I had to either be able to go back to the incubation model or to do something completely different.
So many people, even our ecosystems, try to replicate what they've seen in the U.S. and specifically in Silicon Valley. When you went back to Copenhagen, what did you observe? What was missing? And then how did you, that, you know, it's a tall task to try to replicate anything in Silicon Valley. What was your approach to, like, how do we build something that's true to us?
I think in the beginning, we weren't considering building sort of a community at all. We were just inspired by being, entrepreneurs. And then we sort of went with it at the get-go. What dawned on us quite quickly was the need for us to team up with like-minded. So the community sort of grew out of our common aspiration. And then, little by little, we did see the emergence of more professional VCs, in the beginning, particularly from the US and from other parts of Europe. And then again, little by little, you start getting engaged in also what comes out of universities, and you start seeing the emergence of interest from sort of early family offices, because once you start having that sort of flywheel of founders actually making it to successful exits, they start forming either VCs or family offices, and then you get the momentum going. So it was, I would be exaggerating if I said it was very much a conscious effort at the get-go. It certainly wasn't, but what came out of it sort of 5, 6, 7 years down the line was a number of people, sort of the core people that were entrepreneurs and trying to build something early stage, that they came together, and we still see that very close-knit society where it's very easy to reach out against something that we copied from the American model. This easiness, this easygoingness in a startup community where you certainly should not be afraid to reach out and say, this is where, and this is what we are struggling with, how can you somehow help, and the giving back to the community feeling is certainly also something that we see in our community today. So the eagerness for the accomplished founders to then start giving back and start contributing to continue to build, and fill out the pockets of the ecosystem where we still need to mature.
Can you give us a little lay of the land of your, I think, biotech, green tech, some of these places where you were going to be able to build this ecosystem unique to Denmark?
I think a number of elements started coming together when there was a little bit of maturity into the ecosystem. We did see some of the larger corporates starting to get engaged with the startup ecosystem fairly early on. Again, trying to figure out how they could either replicate the innovation that came out of the startup ecosystem, or even make acquisitions into the larger corporates. And as you say, in particular in green tech, in biotech, and nowadays some pockets also of other types of deep tech, we continue to see that. And what we have also seen in parallel to this are the emergence of real large corporates, which we essentially didn't have like 20, 30, 40 years ago.
Oh, wow.
And that has happened also over the course of this period. So really large companies, and with that, again, an insight or an experience into how to run businesses and how to start building this close collaboration with startups. So it's again, there are many joints in this chain that you have to start operating.
I'm also very excited because you're our first representative of kind of a sovereign wealth fund. And so for our entire audience of, U.S. and North America and European managers and allocators, what is Denmark's export and investment fund? in plain English, what does it mean to be a sovereign wealth fund that must deliver both financial and societal returns?
Yeah, that's an interesting question, because it is in some cases I even say that being inside a sovereign wealth fund is sometimes even a schizophrenic exercise, in the sense that our ultimate stakeholders are the Danish taxpayers. So we have to constantly balance between, you could say, between purpose and profit, between impact and interest. That's the constant balance. That's the constant seesaw for us. And for me, it's also what makes this extremely sort of purposeful on an everyday basis, and certainly something that we when we recruit in the market, it's something that most of our, especially young talents, are certainly looking for, to be part of actually generating real purpose, of actually moving the needle. And so what does that mean? So everything that we are involved in revolves around this idea of building value into the innovation economy in Denmark. And we can probably double click on that in a second, but that's really the core. We have to ask ourselves, whenever we get involved in any investment, be it the sort of plain vanilla fund or direct investments that we make, and certainly when we make the more sort of, we call them transformative investments, how is this gonna trickle down, or how is this gonna affect and improve and accelerate innovation in Denmark? And that's essentially what we strive to do every day. At the same time, and this is where it becomes a little bit tricky, at the same time, if you don't produce a sustainable financial return, if you are unable to generate that, things will change very quickly for you.
How has your approach, changed over time, and finding the right balance for that, with opportunities that are in front of you, as well as with how macroeconomic and geopolitical situations have changed?
Greatly so. Over time, certainly to a very, very large extent. And let me start by saying what you are talking about, what you're essentially asking about, is how do you stay very much aware of the political momentum? Because on the one side, when I talk about being sovereign, it is also about being owned by. I mean, we are owned by the Danish taxpayers, essentially.
Yeah.
So we have an obligation to safeguard that capital, which translates into an awareness of political momentum. So if we all of a sudden were to sort of it doesn't matter, who cares, whatever is important to the politicians, then they would change the framework within which we operate, for sure. So that's one side of the equation, and the other side of the equation is obviously, and that has also happened even in. I've been part of our company for 8 years now. Even at the very beginning, where I was part of our direct investment team, we would certainly do investments where, in hindsight, you can certainly question the commercial viability of such investments, because we basically overweighted the political impact of such investments. So really, when you're asking how are we changing, how have we seen this evolve, I believe that today we put a lot of emphasis on being very professional as an investor, basically, practicing the discipline of investment professionalism, which again is needs to be at the heart of any investment organization, And then it's up to me and my colleagues at our C-level to master the contact to our owners and to listen to the political momentum, and then really being able to dance the dance between, as I said, purpose on the one hand, a little bit to the left, and then a little bit to the right to reach profit.
Correct me if I'm wrong, it feels like there is this sort of geographic focus on the purpose. It's about your citizens, your innovation sector, but you're looking outside of Denmark for the investment opportunities. How do those managers or founders opportunities get sort of tied into the ecosystem if they're coming from outside of Denmark?
Before I answer, let's just get some facts about Denmark. We are a very small country. So we are just about 6 million people. And when you are a very small country, you have to open up to the outside world. Mm-hmm. That's just the bottom line. So when we talk about Danish competitiveness, we are also and always talking about at least European competitiveness, and also in the context of global competitiveness. We constantly have to be aware of and that's certainly the case when we are making say fund investments in the US or in Europe. So we are constantly looking at how can this affect and how can this help to accelerate our innovation economy in Denmark. But it is really a trickle-down effect. If we look at our own market today, it's going to be obviously way too small for us to focus at solely. So we have a very broad strategy, and we have a larger part of our allocation that is focused outside of Denmark, especially when you look at our fund investments. What we try to do is still to build partnerships that actually contribute to a growing value in Denmark also. So we shy away from. I mean, we are speaking every year to a number of GPs, and we start out by asking the question: so, is Denmark really an area of interest to you? Mm-hmm. And fortunately, most of them are quite honest, and some of them, some of the most well-known venture funds in the world will say, not really, no, not really. Thanks for asking, but no, we have no people on the ground, and that's not really the focus area for us. You should be an LP in our fund if you believe in financial return. That's essentially what we're looking for. In which case we politely decline and say, okay, we need to find somebody with an actual interest in either in the Danish ecosystem or in building something alongside us. So we have made just as an example, we have made a couple of fund investments in the US where the intention was essentially to benefit from all of the insight they had on a particular vertical. In this case, AI, defense, and so on, because these funds were so far ahead of any funds in our close geographical vicinity, and so we basically told them, we are looking to build a partnership. We are looking for you to engage with us, and even though we have, take Lux Capital as an example. I think we are a less than 1% owner of the latest of Lux's funds, yet they have gone to great lengths to help us out, to make introductions to the right people in the verticals where we are building something.
I did read that you had recently sort of re-examined your 5-year plan, and the 2030 strategy. You're looking to move faster and smarter. Can you share with us what that means? Like, how are you actually implementing that as a team to help folks know how to work with you or what you're looking for?
Great. Thanks for the interest. Yeah, certainly. So we are looking to do more. That's point number one. We have already been accelerating our investment initiatives over the past couple of years, and over all the way through 2030, we are looking to accelerate that even further. And internally, we will continue to professionalize our processes and continue to work smarter, and try to sort of reduce complexity. And that again, some of it comes with being sovereign, and we need to be aware of that. Where it touches the market, and that's probably what you are looking for me to address. Where it touches the market is we, in our new strategy, we are much more focused on, say, designated verticals and designated stages, which means that we will allocate a lot of our capital into areas where Denmark is already in a, we call it a stronghold position. So in a position of international leadership in essence. So we have spent quite a bit of time identifying those verticals, and also 2 stages where we will certainly double or triple down, and again looking for key partners to make that happen. We believe that if we can build on something that is already well established, instead of trying to build everything from the ground up, and there are a multitude of areas where, you know, we decide to leave that to the private part of the market, or we decide that, you know, it's going to take too long for Denmark to catch up, or maybe it's not even possible for Denmark or Europe or our close Nordic partners to catch up in an area, in which case I don't see a point in us continuing to allocate our capital in those verticals. So the essence of our strategy is really, to a great extent, more about prioritizing, you know, and then doubling down and building clear strategies in verticals, and inviting international partners to join us on that quest.
Now we're going to take a quick break to speak with our sponsor.
Are there market trends impacting regulation in venture capital?
Yeah, I mean, I think some of the market trends that impact the regulatory footprint, really are around, I think some of the maturity in the space, and what you might see, longer hold periods, more secondary activity as you get longer tenured funds and you get some rollout of assets. You get some crossover of different strategy types, right? I think that as managers think about where do we see our portfolio companies needing needing capital, needing our services. I think you're starting to see some interest among VC managers on different types of assets going into the portfolio. All of those things trigger different types of regulatory requirements, right? So, longer hold periods and valuation is really going to go to, how do we feel comfortable that the valuation the manager is carrying an asset at is the appropriate value, and from there, what do the governing documents say about how you handle valuations, right? The SEC is particularly interested in how a manager treats write-downs and write-offs, and how you handle the valuation process. And I mean, the write-up, write-down, valuation marked up, valuation marked down. There's no such thing as a conservative position on valuation. There is getting it right under the circumstances, and that's really what the staff is looking for, right? Is look, sometimes you're going to mark something up, sometimes you're going to mark something down. The question is, why did you do either of those at the particular time that you did it? And that really goes back to, what does your valuation process look like? What kind of documentation do you have? The steps you took reasonable under the circumstances. And I think as you get longer dated funds, and you get funds that are reaching the end of their life, and maybe they have those remaining assets that really are the difficult ones to monetize, you start getting a more and more concentrated portfolio with more and more challenging assets, and that just that's going to draw some attention and some interest from the SEC, particularly when you start thinking about what some of the other industry trends do to managers, what that might cause for managers in terms of the regulatory profile, right? If you think you might spin out a secondary or something like that, it is likely, certainly possible, that you will no longer have only VC fund clients. And if that is the direction you're going, as the business matures, as the funds mature, you might have a product now that causes you to lose your exemption. And lose your exemption. You may choose to put that exemption aside and follow the business, right? Where is the market? Where are your LPs? Where is this going? You choose to move to the next level, and when doing that, there's going to be more scrutiny about how you treated these things as you got to that stage, and so I think that there's some pressure on that as well as you move in that direction. I think that comes up equally with the shift in the types of assets, right? Expanding the product type and maybe even the types of strategies that go into a portfolio. That again can lead you to have assets in your vehicles that go into the non-qualifying bucket for your VC funds, and maybe your fund loses its status as a VC fund. And now the cascading effect of what does that mean for your regulatory profile? So I think you've got some market trends there that put some pressure on the regulatory space and the regulatory profile of managers that really just comes from partly the length of time that these managers have been around and the maturing of their business.
Yeah. It seems linked a little bit to what LPs are interested in allocating. Are you seeing trends sort of from being driven by them that are affecting regulation?
Well, I think certainly, look, that the conversation with folks who have the capital and what they like to see and what they like to have access to is certainly driving the types of products that managers are offering into the marketplace and what they're willing to do, right? And so I think that is an active conversation. I think it is partly being led by the LP space and kind of what they'd like to see from managers and what they'd like to have in their portfolio. I think that's part of it. I think a larger part of it is just overall the pooled asset vehicle space just developing in a lot of ways where there's kind of a convergence, but at the same time an expansion, right? So it's a convergence of asset managers kind of bringing together a lot of different strategies and types of product under the same banner, if you will, while at the same time reaching out to more and more places for capital, right? So you've got the same manager expanding the type of offering and strategies that they're offering, while at the same time looking for different types of LPs and trying to respond to what those LPs want. So I think you've got both things happening at once, which will absolutely change the regulatory profile for those managers as they bring in different types of LPs and try to fundraise in different spaces, while at the same time making some modifications to the way that they offer their product.
Yeah. No, that makes sense. We were introduced by Shane Goody, who is the leader of Sidley's venture funds practice. As someone who gets to work with Shane and his team, why would you recommend GPs in venture choose Sidley?
Well, I mean, Shane is amazing, and so yes, I always have to thank him for connecting me with wonderful opportunities to talk to people like you about the regulatory space, which I know and love. But look, I mean, that's just part of the Sidley community. I think we all work very well together, and there's a great team there. It's deep, it's broad. If I need to know something about the VC space and what VC managers are doing, or kind of how are they thinking, right? Like, what is the VC community thinking? Shane's a deep resource there, and he's one, right? We have a breadth of private fund managers, VC managers, and other clients and other partners who are doing that work, and all of the different industries and business types and different needs that those advisors and clients have. It's across the client base, and so we have deep experience across the board.
It's a shared Sidley brain. Fantastic.
It's yes, it's that knowledge that we share, right? It's done with intent, right? I think the buzz phrase, industry phrase, is institutional knowledge, but I think it's really organizational intelligence, right? If we think of it as a collective brain, as an organization, we're as smart as each other, as long as we share the information and have that accessible. And so, I always tout the organizational intelligence at Sidley is extremely high.
From each of you that I've gotten the chance to interview, I would say each of you are really pulling your weight. There's no duds.
And now back to our LP interview.
Erik, what are those verticals that you all are doubling, tripling down on? And a follow-up question is, do they change based on your fund investments or direct investments, or as you called it in our prep call, transformative bets?
Will they change over the years?
Or do you have different focus areas? So for your fund investments, you're looking for these verticals. And what are those?
No, there's a
verticals?
common. Yeah, sorry. There's certainly a common thread in all we do. So we basically run a 3-tiered fund. A part of our team focuses on fund investments, a part of our team focuses on direct, and a part of our team focuses on these more transformative, more infrastructure-based bets, but they are all sort of interconnected. So when we talk about these highly prioritized front-running positions, we have identified, and Alexa, you also mentioned this earlier, biotech or life science as certainly an area where we have world-leading companies. We have world-leading research institutions. We have these very large, they're actually corporate funds. It's not something that exists in many places outside of Denmark, but most of our large corporates are owned by these funds, and we collaborate, and they sit on huge assets and huge amounts of capital, and they are engaged in also building the Danish ecosystem, and in this case the life science or the biotech ecosystem to a very large extent. So they are also engaged basically in the same mission as we are. So we team up with the private partners with their capital. We team up with the universities. We team up with obviously with big corporates. We team up with other capital partners, and then we build a comprehensive strategy around that in biotech life science, in selected green technologies.
Okay.
And also when it comes to quantum computing, there are actually, because all of it emanated from the Niels Bohr Institute back 100 years ago, located right in the center of Copenhagen. So we actually see an opportunity because there's so much talent in that particular space. And given that quantum computing might be one of the core components of the future of compute, all of a sudden we see an opportunity to be, let's say, also a manufacturer. Imagine a TSMC actually. It's ambition to that extent. Imagine a TSMC in Copenhagen, producing core components for the future of compute, emanating from this quantum industry. So life science, biotech, certainly, quantum, with particular focus on quantum computing and quantum chips. And then selected green technologies, again, in particular in energy, but there are also a number of sort of smaller sub-verticals where we see an opportunity. Those are sort of the core verticals, and then we have an agnostic stage focus on growth. You probably don't know this, but if you are an accomplished scale-up in Europe and you want to raise $200 million, there are no European funds to support you, as in no one, and that has to change. If we want to keep evolving and building our ecosystem, obviously we need fund structures also to cover that part of the value chain. So that's and that we have to do that agnostically. We cannot do that based on a specific sector because the market is too small. So when it comes to growth in particular and the fairly large rounds, that's a separate focus of ours to contribute in the building of such structures at a European level and at a Danish and a Nordic level as well.
Is there, especially U.S. ones, are there any misconceptions that that you kind of have to are kind of like fiction out there about you, and they're not approaching you the right way? Just curious on that.
Oh yes, indeed, and I think some of the misconceptions and some of the reputational ideas of who they're dealing with, we have put ourselves in a position, certainly with how we operated some years ago, that has to change. Some years ago we were fairly slow in our processing. That has changed. We were less direct in our relationship management. That has definitely changed, and I think a little bit bringing in, as I said before, bringing in the founder energy, bringing in that, come on, we need to get this done. And if I may be a little bit, tough on sort of the financial sector, if I may, sort of broadly, you see me now because I've been to all kinds of, and I just got in. I'm in my home office here, but this is exactly, well, the shirt should have been blue probably, but this is exactly how the financial sector presents itself in general. And in particular, if you look at investment firms that are doing private equity or currency or whatever it is, a little bit backward leaning, a little bit complacent, if I may, and that is not a valid currency in venture. You have to lean in, you have to be present, you have to. It has to matter. And I think when we talk to GPs, when we talk to funds today, they understand. Most of them understand our interest. Most of them understand our purpose. And again, just to be clear, I have the utmost respect for, I don't know, let's say American Excel, for instance. They have no presence in Denmark, and I can't remember if they've made any Danish investments. Again, it's a brilliant fund platform. And so I don't expect everybody to buy into what is important to us. But what I am expecting is the ones that we team up with, they need to understand, they need to buy into our narrative, they need to buy into this idea, this very serious idea of close partnership and building something together. And we are seeing that today. So I would make the argument, and maybe I'm being too cocky here, but I would make the argument that we have shown to the funds that we're working with and all of the funds that are in our pipeline today over the course of the last, certainly the last couple of years, that we are a serious player in the market, and through this sort of comprehensive, very strategic approach to the market, and our ability to also invest in, let's say, supporting infrastructures. In Denmark, we are part owner of an AI supercomputer. We recently acquired a quantum computing facility as well.
Can you share with us just briefly the categorically you're doing fund investments, direct investments, what and it sounds like also infrastructure?
Yeah, and basically infrastructure in a sort of in a broad sort of maybe even an abstract definition. So again, coming back to our high priority verticals, in life science, for instance, in life science there is a broad strategy to build what we call Innovation District Copenhagen. Trying to replicate Kendall Square. I was just in Boston the other week to walk around, to meet companies and funds and obviously key stakeholders from MIT and Harvard and really to understand the formula that they have been, the best at building in the world for the past, 25, 30 years. And so on life science, we see an opportunity to sustain such an ecosystem, and if it requires us also to take a look at being part owners of important pieces of infrastructure, that might be part of that equation. And already some of these life science startups that are prevalent in our part of the world are already using the AI supercomputer that we are part owners of. So in quantum it obviously makes sense to have a quantum computing facility if we want to be part of essentially building the core components for quantum computing or the future of compute. We need those types of state-of-the-art pieces of infrastructure that will help sort of constantly accelerate the momentum that is in the market right now. So it really it is less of it is not necessarily sort of a normal piece of infrastructure that you would expect. We are already very one of the most digitalized countries in the world, but it is certainly this idea of supporting, bringing in technology that is state of the art to support the constant acceleration.
Erik, I think in our prep conversation, we spoke a little bit about this term called technological sovereignty, right? And what does that actually mean? And I think ever since that was almost a month ago since we had our first conversation, a lot has changed where I think that even means more today. And I'm curious on what that means to you and your platform, given there's even some movements of European government bodies looking to kind of focus more on their own domestic innovation, looking at public dollars. And so you being kind of this middle of public and private, how does that influence like what you focus on and what that means for you for the next 10 years?
It's kind of sad that we are in a spot where we need to talk about technological sovereignty and sovereignty in general to a much larger extent. Let me start out by saying that. And it wasn't part of the conversation at all. I mean, you guys would obviously know this, but I can't recall that I even used the word and even talked about the sovereignty aspect within the context of innovation 2 years ago. So I do feel slightly concerned at how this will affect the way of thinking, and how this will affect the way we deal with one another, how this will affect the partnerships, the alliances that have been built over the past 20, 30 years. That said, we have also to look at reality. And reality is that it seems to me that some of the superpowers of the world are becoming more sort of interested in containing technology for themselves, which, you know, I understand the interest and the priority, and the subsequent reaction. And I can just look at Europe as obviously the what happens just outside of our window. It becomes imperative now to own your own technology, because what happens if you cannot access technology tomorrow? So the core of the discussion on technological sovereignty is concern. Is this almost panic that we will all of a sudden be unable to access technology because somebody else owns it? Just look at, and now it becomes even bleaker. If you look at computer chips today, Europe is not even on the map. If you look at AI today, Mistral has built a great model, and that's it. You know, and we have ASML as obviously a great sort of hardware technological company providing key technology in the production of computer chips. But beyond that, we are trailing every other part of the world, and that is critical for Europe to either figure out how to team up with the right people so that, you know, we don't become overly dependent on the other parts of the world where, you know, we can't really rely necessarily on the relationship, or start building their own technology stack. And we need to do both. And defense is obviously another critical example.
It's fascinating. It's kind of like reliance in the past, in the 70s and on, and kind of like oil, with the cartels, and now it's like technology is being essentially kind of like a scarcity mindset can be weaponized and taken away from certain areas. And so I would just want to give you all credit from what you're speaking about, of like having, despite all that, understanding kind of your situation, where you all have advantages, and still looking for partnerships with specific individuals, specific firms. And I think that's what the world is looking for now, with like globalization cracking and now things becoming more insular and regionalized, is we still need a world of bridges, right? And I think that you're doing that with a lot of your
Bridges
partnerships.
or bribes, one or the other. What do you want to...
I think that's a
We've
great
overused the
comment.
bribe.
It's both a matter of obviously trying to navigate to the best of our ability, but it's also a matter of acknowledging reality. And the reality is that we today we are hugely reliant on the defense technology. So when we've been trying to, we are nowhere on defense, and so we need to start essentially from scratch. That's the reason why I didn't mention defense as a priority vertical for us, because I would love for it to be a priority vertical, and we are allocating, you know, millions and millions towards defense, but we are starting way down here and moving, you know, slowly forward. And for that purpose, we've teamed up with American counterparts. Because, and why? Well, because they are the best in the world. and we need to start learning from the best, and hopefully we can continue to rely on our American friends. And that's the balance. Sovereignty is certainly not it's certainly not easy to maneuver. But what we have seen so far is certainly a willingness. I mentioned Lux before. They were actually the ones who opened the door for this one particular company, Saildrone, for us that we are a proud investor in, and who has already taught us quite a bit about building a defense platform, defense technology platform, and they have also set up shop in Europe. So again, it's a multitude of ways to build something on our own shore without or at the same time as I said, acknowledging that these are the ones that we need to work with. It doesn't exist in Denmark currently.
I would love to hear something you're optimistic about, something that just gets you jumping out of bed in the morning.
Okay, that's actually very easy. I meet brilliant founders every day, and every single time I sit down with a founder where there's a sparkle, there's a belief in the future, in building, world-changing technology. I get goosebumps, and it's I'm 52, and it's so rewarding for me to be part of an ecosystem where goosebumps are part of an everyday operation. So I have to say that, and it brings me sometimes back to, I don't regret having taken the move across the fence at all, but it allows me to still see that fantastic energy. So that's certainly also, I would say, it brings an optimism to my heart, to see that belief that we can change the world, and I believe that. I think Bill Gates said that through innovation we can change the world, and that's also part of my mantra.
Love that. Well, that's after I had you go through the geopolitical situation. It was great to end that strategy and on what's optimistic, and that's true. Like, we are very blessed to be doing what we all do and seeing people who are really trying to change the world. So, Erik, if someone wants to find you, how should they reach out and find what you all are doing?
I'm very easy to find, and my initials are EBS at ifo.dk. So again, my email is open, and we try to. We talked about that a little bit earlier. We try to be very open. So hook up with us. Let's get a conversation going. Let's start. Building these partnerships that are so important in order for us to actually make a dent in this sometimes cruel world.
I love that. Erik, thanks so much for sharing your story, IFO's story, and we'd love to have you on again in the near future.
I would love to. It was a pleasure talking to you.
See you later, Allocator.
After Portfolio Tile, investing with a smile.